Unusual option activity. 4 tips on tracking option volume. I'm often asked how I track the unusual option activity that I provide for my subscription service and my blog. For the last several years, I have been very secretive and have not divulged that information to anyone. After many years of dodging this question, I'm ready to reveal the tools that I use, how to understand the unusual option activity, and most importantly, how to trade it. As you know, good option traders use leverage to make profits with minimal capital. Being a buyer of an option is a low probability trade since 60% of options expire worthless. To succeed in making a large profit in calls or puts, I believe you need to know where big money is going in the option market. Being able to spot where money is flowing in the options market will typically give you an edge to keep you ahead of the crowd. I have often noted that unusual option activity signals a potential large move. The reason why unusual option activities often signals a potential large move is because insiders will typically act on information they hear or have a heads up on news that will cause the price of stock to move. These insiders will scramble into the options market to make very large bets to profit on the leverage that options provide. I remain the best in the business for being able to spot and track this type of activity and deliver the information to my clients through my subscription service. Many try to duplicate or even copy what I provide, but my insight and experience always prevails. The activity in the Aruba Networks Incorporated today is a perfect example. On Fridays, I have a live chat room open for members so that we can trade weekly options together. At 10:58 a.m. Eastern Standard Time, I was running through my typical morning scans to track unusual options activity, and I picked up on some big buyers of the March $23 calls at 40 cents per contract. Below you'll find a list of the top 10 orders for today, and you can see they came in at 10:39 a.m. Eastern Standard Time as buyers of large blocks of these contracts. This type of action always gets my attention because these are the buyers of call option contracts that expire in 7 days, 2 of which are non-trading days. The only way these call options will profit is if the prices move higher by next Friday. If you look at the 1-minute chart below, you will notice this large spike in the volume at the exact same time that those call options were bought. Right after that activity hit, the price of the stock continued to move another $1 higher. Those call options that were bought reached a high of 85 cents per contract and finished the day at 70 cents per contract. I alerted members in my chat room that this is looking like it can make a push as the calls are being bid up to 15 cents by the buyers. Unusual option activity is only an indicator. In my opinion, it is the most real-time indicator available because it shows me where the money is going in the options market. I typically pick up on the unusual option activity and apply technical analysis to filter out ideas and find the trades that have the best risk to reward. Unusual options activities. Here are my 4 tips. 1. Volume. Compare the call put volume versus average daily trading volume. Take it a step further and compare the volume in a particular contract with prior open interest. I like to see the volume at least 3 times the average daily volume. If the volume is greater than the open interest, then you know that there is some unusual option activity. If you're wondering if the volume is new, then look the next day to see the change in open interest. I like to see option volume occur in large blocks of 100 contracts or more. This size indicates that the volume is a result of institutional buying rather than retail customers trying to find the next hot stock. The institutions tend to be the smart money, and that is who I want to follow. 2. Go backwards. When you notice a change in activity, look at the options in front 2 months to see if anything catches your eye. 3. News. Unusual option activity does not happen in a vacuum. There is a reason for it, and it is often connected with the headline news of the day. You'll want to keep current of the news in the industry, as well as press releases about conferences and other significant events. After you have identified what looks to be some unusual option activity, you'll have to determine if the activity is opening buys or sells. To do this, look at the bid and ask on the contracts and watch to see where the last trade price is, to see if traders are aggressive in selling the option, hitting the bid, or buying the option, willing to pay the offer. And number 4, spillover. Look for spillover into other strike prices. Market makers will typically take the other side of the trade. In other words, they want to remain delta neutral by selling calls to facilitate the transaction, and then they will immediately offset their position utilizing the underlying stock. That means that they are buying stock against the calls they've sold. However, if they think the buying is a result of smart money, they may hedge their position using other options, which result in a spillover in the purchase of calls at different strikes. Unusual options activity conclusion. I hope that you learned something from this information and that you can benefit from the tips that I shared today. I challenge you to start looking more into the options chain when looking at different ticker symbols. As I mentioned above, I am ready to teach those that are interested in learning more about the tools I use, how to understand the unusual options activity, and most importantly, how to trade it. I am currently putting together a course, and if you are interested, make sure you sign up below. I'll be providing an early bird special, so be sure to watch your email box for details.